And good evening. This is the Elliott wave update for the S&P 500 for Wednesday, April 20th, 2022. Again, very interesting market. We are in the beginning of when the larger Titan-like companies will start to report. And yesterday we had Netflix. Seemed to have been a market disappointment. Stock was down over 130 bucks at one point today, kind of trying to rally back a little bit. Today we had Tesla. They haven't really decided if it's going to be a gangbuster. Stock closed down 50. Now from there, it is up 50, at least 50. But they're not ripping it in either direction. So until that's, the way it is right now for earnings reports. So what that does to our wave count is basically nothing. So again, even with all that movement, even with all that volatility and all of that trading, it leaves us in pretty much the same position we were in yesterday and likely will remain in for the balance of this week and into next week. As all of these earnings reports come out, the information gets supposedly digested, and then people's opinions become apparent as to whether you want to be long the stock, short the stock, or nothing with the stock. How is it going to affect the price of index? How is it going to affect the price of the stock? So until that's all settled out, couldn't tell you. In any case, what we can do is put parameters around it. We can take a look at what the Elliott wave count is now telling us, which basically on the daily, nothing. Nothing has changed. So in other words, what I'm talking about is that we continue to be in the beginning stages of an intermediate third wave down, and that's a part of the primary degree first leg of this larger correction. So again, we have put the high end for a intermediate degree, a primary degree, a cycle degree, and a super cycle degree. So we're in a super cycle degree correction that will be, we have to fulfill all the way, again, we have to fulfill all three levels up to there to complete that fourth wave on the super cycle level. So we're still in the very beginning. We've done intermediate waves 1 and 2 of primary 5. And again, we still don't know even if this is going to flip and go to an A, B, C, where it would be primary A. So instead of 5 waves down of intermediate degree, we could get 3 and still it's going to be the first leg. So again, that's what we're dealing with, and that's as far as I can get. Now I can put parameters around what I would expect based on this being a third wave down or a C wave down. So on the intermediate degree, it's either going to be a third wave down or a C wave down. They're going to carry the same characteristics. They're going to have the same feel. They're going to have the same look. Both are 5-wave structures. Both contain a fairly strong point of recognition area. Both will unfold in 5. One or more of the 1, 3, or 5 will subdivide and extend. So what becomes important is to kind of just keep what's in front of you. So that's what we're building. We'll decide after, because it'll be the market that decides. It'll be how the market's going to react, how we as a collective group of people react to where we want to put our money, what the value of the money is, etc. What's going on. And to go that far out and to say, well, gee, I could tell you, I'm basing mine on history. That's the status quo. That's the way we have dealt with life for quite some time. So the latest segment of status quo kind of goes back to, it's like if you had invested $1,000 in the S&P in 1952, you'd be a multimillionaire. If you had invested $1,000 in Amazon in 2003, you'd be living next door to Bezos. So that is all status quo, because that's telling you that history will repeat itself. We do things on a cyclical and historical basis. This is the way we've always done it. You invest your 401k and your retirement money in the market because you're in it for the long haul. You're not really looking to take your money out until you're ready to retire. That's a setup. Got to tell you, that's a big, big, big setup. Have a little bit more responsibility with your money because it's yours. In any case, I think that we can put parameters around each move, and that's what I'm doing now. So we need to make sure, and I've taken off all the Fibonacci. We do have the moving averages, and I want to make this clear. Take a look. Come on, don't do that. All right, so this is going to get funky on me. Don't know why. Different computer than the other one. All right, let's see if we can get that open now. Ta-da. Look at this. See this? This is the daily chart, and the moving averages are all sitting on top of each other. That is a market that has no idea what it wants to do. It's too early in the process. So we're still within that wave two. That wave two has upside parameters. I'm just going to put, I'm just going to put that down. We're just going to put some retracements down. So we can see that the market nearly got up to that 50% rate. So 50% retracement of this initial decline. And that's the most common. So that sits at 44.94, and you can really call it up to 4,500-ish. And so far it's gotten up to 84. So it came within $10, I believe. Yeah, came within $10. So I leave open that potential that is going to tack on up to 4,400. Then we have the next level up is 45.26. Certainly possible, and actually 45.50 is possible. And on the daily, right now, the 200-day moving average is providing resistance when we need to bounce back up and support when it needs to break down. And basically right now, when we take a look at this, so are the 50 and the 20. The 20 is the blue, the 50 is that orange colored one. They're all flat. Indecision on the market's part. But when you traded intraday today, that was pretty good. But the daily's telling you it was a snooze fest. Now I'm going to drop it down to the hourly. Let's take another look here. Same parameters. Here we go. 50%, 618, 70.5. The market actually can get up to 45.88, almost 4,600. Just like I tried to do there. At this time, it could actually try and get it done and break a little bit. It just cannot go above 46.31. Same thing we were dealing with here. So we're dealing with it again, but on a bigger scale. So there's still room to go. If anything, let me break this down into 30. Let's count this wave thus far. Here we have A, B, C, B, 1, 2, 1, 2, 3, 4, 5 of 3, 4. Well, actually, I put the 4 over here, excuse me. And then again, 1, 2, 3, 4, 5. So I can count an ABC. Now, there's still potential that we can have upside. So that would put this into a different type of account. And that could be ABC for wave A, get an ABC for wave B, and still get a C wave up. This is all back and forth and knock your teeth out because it dropped. And if you thinking, okay, we oversold, we should go up, you waited and waited, and then it went up, and then it went up, and you're like, okay, maybe we need to go down, and you wait and you wait. It's the product of what's going on. There's a lot of indecision, and because the volatility is higher, it's going to put in these larger moves. This is a 30-minute chart. When you're sitting on a 5-minute or 2-minute or 1-minute chart, they can be pretty wicked. And to move in and out, you have to be very careful because you can really blow out your account waiting for a move to turn and not be wrong. You'll get it, but how much are you willing to put at risk and what can your account handle? So rules are important. And again, I'm going to say that rules are important to day trading. Rules are important to your own success. If you break your rules, you're likely going to have a bad day. if you follow your rules, that means taking a hit, but not a big hit. The volatility is strong enough and the trades are frequent enough that you could drop $200 on a trade and make the $200 plus on the next bar, or in the next few minutes. If, depending on how you trade and what you can do, you could lose up to $1,000 and be able to turn it around if your account, number one, can handle it, and number two, you're really trading well enough because you're going to bump up your commissions in order to get all the money back. But it is doable, and the market's moving. So again, my emphasis is like, please trade by your rules. If your rules is you're limiting, or you have a stop, a set stop, you're going to have to honor it, because when you don't, it breaks your mindset. It just switched you to a negative from a positive. You're having positive thoughts about what the market is doing, catching the move, understanding what the limitations are. You've already picked your entry point, and you get in. The market tells you differently. And normally within that first 30 seconds to a minute, it's going to let you know, no, don't think you really want to hold this. So there is something to say about not holding a bad trade more than a bar. Now, most people really have a hard time doing that. This 30-minute, that would not work. But on the very short terms, like a 1 minute, people have a hard time hanging on to that adjustment that they would have to make. So in other words, it's like if you're in a bad position, you thought maybe it's going to go down here, you saw that it held the 8, you bought into it, it didn't. But eventually it did, and it came back. But in the meantime, if you thought, oh, okay, I'm going to hang on for another bar, now you're down twice as much. So, and yeah, there are too many ifs that go into that. That's why you have the rule. So your rule would have been, you're getting in as close as you can to the 8. If it breaks below the 8 with any significance, you're out. So maybe you're going to risk $100 or $200. And your plan, your thought was that it would go up and would likely start to head for that high. And you got pretty dang close. So in any case, again, I'm working off a 30-minute chart, so I'm just giving you price action here. But again, the point is, don't hold on to it. You don't want to break your mindset. You want to keep things in focus. Making back a little bit is easy when the volatility is strong. And that's what we had all day. These are nice moves. 30 minutes, but they're nice moves. So it's 30 minutes of going down, 30 minutes, an hour of going up. Lots of stuff to do in between. So for tomorrow, we need to continue to allow for upside. They like Tesla a little bit more, now trading at 10,027. So 44.94, 45.26, 45.50, they all come into play. 30-minute. Now I'm going to go back out to that daily where all of these moving averages were bunched together. So they're going to, when U20 gets above that 50 and gets above that 200, it's going to put some upside pressure on prices. We have, I don't know any larger firms that are reporting tomorrow. That all is going to come. I think for this week, we did see, we had Netflix and Tesla. I do not know what we have for tomorrow or Friday. So again, I would imagine tomorrow we could have some, but not Google, not Facebook, not Amazon, not Apple. They all come in next week. I believe AMD comes in next week. I believe that AMAC comes in next week, or even further out. AMD, oops, nope, I didn't want to buy it or sell it. AMD comes on May 3rd. So we got a little bit of a wait for some of these. So tomorrow we may just have another, not broad-based in terms of we start breaking above or we're breaking down, that we get a range and we just kind of trade with some velocity and volatility inside of it. So again, parameters to the upside there are there. Parameters to the downside, again, coming back down to the hourly, you've got to play it with the moving averages. So for right now, just turn this thing all back up on an hourly chart. 50 just needs to break above that 200, which is at 44.43. And it's got to stay above it. So it can't just break and come back down. It gets above it, and then everything's lined up to continue. Well, you have parameters should that be the case. And your parameters can go all the way up to 4,600. So not you allow for this, and so you have to be in the position to trade it. Now, if you're looking to position trade, well, you can make some adjustments to your position. You could add to your position. There's a lot of things that you can do as you're trading up. There may be a core position, so you're going to trade in favor of the core position by if it's a stock or whatever, you may put a put underneath it. You know, if it has an effect and you know that the put will make money against maybe a losing position, but you're going to keep that position, there are a lot of things you can do. In any case, tomorrow, downside would be these start breaking back below these moving averages. But again, here we have the 200 to 44.42, the 50 right now sits at 44.39. If it continues to go up, that'll go. But that's not going to move real quick. So we still have that it's got to come back down and break. Plus, if the 50 goes above it, then of course, to reverse it, it's got to go below the 4, the 8, the 20, the 50 to get down to the 200. When it starts breaking the 200, you're opening up the doors again. Again, here, same as in the NASDAQ, to be more concretely sure that the downside was picking up again in the form of a minor third wave, unfortunately, it's going to have to break pretty low. It's going to have to break 43.60, 56, 55 to give us enough support that it's like, okay, minor threes in force. But I will tell you, if you trade what's in front of you, if you trade the move, again, I'm talking day trading, again, position trading, it does a little bit differently, but there's a lot of intraday trading in the options. So there are times when you can get in, get out, you can make your move. And or if you've got defined risk on things, that you can roll things, you can add things, you can do a lot of stuff. In any case, have a great trading day tomorrow. And the next update will be Thursday, the 21st.